Do you think this is going to continue? What do you think is driving it? Is the repo market playing into this? What are your thoughts?
Well, I think a lot of this current sell-off is a combination of, fiscal stimulus has partially weared off at this point, right? So a lot of people got checks and things like that, and that's kind of, as we go months away from that, that starts to diminish. But then two, we're starting to see, for example, the Delta variant, right? So there's news about that, and it's not just a medical question; it's also the government responses to that, right? So there's kind of the medical question, but then there's also the economic question of what localities are going to lock down, how's consumer behavior going to change if we start to see that happen, and so I think we're kind of the market is sort of freaking out a little bit about that and saying, okay, well, some of the fiscal stimulus is not as impactful as it used to be, and we're seeing some headwind to the economy, and so that reflationary trade that did very well for a period of time has kind of cooled off. So we see bond yields down, we see commodities down, we see cryptos down, we see some of the more cyclical stocks down, right? So even though the S&P 500 has been really strong, if you look at breadth under the surface, things that are more tied to the economy, like banks or industrials, they've been weaker, whereas some of the mega cap tech stocks that are kind of economically agnostic, they've still been doing very well until today, when kind of most things are down. And so really, I think it's kind of a deflationary impulse. It also, it clears excess out of the market. So we've been taking away these kind of meme stock valuations and kind of clearing out a lot of that kind of excess, so that when this eventually bottoms, market participants can separate the wheat from the chaff for the next round of activity.
When you say yields are coming down, just as a flight to quality, as institutions rotate out of stocks and move to Treasury securities?
Yeah, we've seen that happening. So 10-year yields have fallen pretty quickly. And it's interesting because that's despite the fact we've had inflation surprises to the upside. And so we've had kind of the Treasury market say, we think this is going to be transitory. So the bond market seems to be agreeing with the Fed. Now it's complicated because the Fed is still buying a lot of the Treasury issuance, right? So they certainly have their thumb on the scale in terms of impacting the supply and demand of that market. But even in that context, you do see varying private demand. Part of the Treasury purchases, it's not so much kind of, there are traders buying it, but if you look at actually who's accumulating large amounts of Treasuries, part of it is the pensions. So they're actually pretty big Treasury buyers. Some of the banks, like Bank of America, have been buying Treasuries, and then a little bit around the foreign sector, right? So we've had kind of foreign sectors not been buying Treasuries as much as they used to, for years now, but there are periods of time where they kind of come back to the market, specifically when their FX hedged yields become better. And so, for example, if you're a Japanese or a German investor, there are periods of time where you can buy a U.S. Treasury, hedge it back into your own currency, so you eliminate the currency risk and still get a higher yield than buying your own government debt. And so some of them will buy the Treasuries in that way. And so right now, those are kind of the three big sources of demand besides the Fed.
But gold is barely down at all today. I'm going to share a gold chart today is Monday, just for our audience when we're recording this, and I hope to have this out Tuesday. And the gold chart, is just down $2 or $3 right now, barely down at all. Whereas the silver chart is way down, 2.5% type of move. What do you see this? We're a precious metals channel. Speak to what's going on in the precious metals market in relation to the chaos in the market overall right now. How do you see that?
Yeah,
Right.
so what we're seeing right now is kind of characterized as a disinflationary move. So people are pulling out of risk assets into defensive assets. People are concerned about, say, how the new virus variant or lockdowns could affect consumer demand, could cool off inflation a little bit. For example, you could have less oil demand, as an example. And so generally in disinflationary environments, gold outperforms silver. And so, for example, if you look from the period from 2018 to 2020, you generally had gold, doing a lot better than silver. And then ever since that March bottom of 2020, we've been in this more reflationary environment. You've generally had silver outperforming gold. And so when you get these kind of deflationary or disinflationary pulses, it's not too surprising to see the more volatile metal silver go down more than gold. Whereas if you were to get a big inflationary impulse, I would expect to see silver outperform gold. So it really kind of comes down to that is it more of a deflationary, disinflationary environment, or is it a more pro-inflationary or stagflationary environment?
Do you see this as maybe the early stages of another, I don't know, March 2020, where they, the market tanks, lockdowns, more stimmy checks, Fed balance sheet explosion is like the next step of this, perhaps? Do you see that coming, or am I getting a little bit too apocalyptic here?
I don't think the magnitude would be as large as March 2020. I think part of it is a medical question that I'm not very, likely to answer. But one thing I would observe is that I think, the more this repeats, the less kind of tolerance, the public has for this cycle, because, you can't, every time you lock people down, you have one of two choices. You either compensate them with printed money, or they just lose value, right? So if you tell a small business that they can't operate, you don't compensate them, then they, if they eventually go out of business, then basically Amazon takes that business, right? So we just kind of consolidate value up the value chain into the big mega caps. And so that's obviously not something that most people besides the corporations would want to happen. And so, it's pretty clear at this point that, the virus in various forms are going to be with us for a long time. We don't lock down the economy for the flu every season. And it's, obviously this virus is still somewhat more potent than the flu. So it's not exactly an apples to apples comparison, but when you compare it to other causes of death, so basically I've described it as we have to watch three variables. We have to watch the medical variable, the virus, what variants are doing, how contagious are they, how deadly are they? Then we have to watch political responses to that. So are politicians doing lockdowns or not? And then we have to watch the public responses to those political responses to see, is the public accepting it? Are they on board, with that? Are they pro, locking down and trying to eliminate deaths as much as possible? Or are they kind of saying, we're sick of lockdowns, we're going to go protest against it, we want to, vote those people out of office? So, and obviously you're going to have different answers in different countries or different states. Basically, I think it's a similar situation to March 2020, but we've had a couple of these waves before too, right? And so this is the one that's a little trickier because it's starting to impact even vaccinated people in some cases, and so it's a little bit different than those waves. But I think overall, it's the probability of complete lockdowns like the whole world experienced in spring of 2020, I think is less likely the more this repeats.
I think you're right, because it hasn't been in the mainstream news, but if anyone who's active on Twitter, I'm sure has seen all the tens of thousands or hundreds of thousands of people protesting in Greece, France, various European countries. And frankly, if the U.S. government tried to suggest another lockdown, I think there's a lot of states like Texas, Florida, who would just completely ignore them this time and would just say, no, we're not going to do it. But Lee,